inflation is a bigger problem than the up move in equity markets, says Arvind Sanger, managing partner, Geosphere Capital Management. He said interest rates are headed structurally upwards as inflation is rising in a similar manner. Listen in to an excerpt of a conversation that Udayan and I had with him earlier on.
Arvind, great to have you on the show, and we haven't seen this kind of volatility in markets since the start of the pandemic. What is it telling you? I mean, is it likely to continue for much longer, or is the market slowly approaching oversold territory?
I think the volatility is going to stay elevated because what we got, I'm not saying that the market is not, oversold and due for a bounce, but in terms of what has been the guiding star of the markets for the last couple of decades has been that whenever things got rocky, whether it was the pandemic, whether it was a 2008 financial crisis, or in prior incidents, the central bankers, led by the Federal Reserve in the US and of course other central bankers, stepped to the rescue. This time, there is no expectation that the central bankers are going to ease off their aggressive rate increases because inflation, which is at, I think about close to 40 years highs globally, is become a bigger problem than whether or not the equity markets are selling off. So I think that changes the fundamental underpinnings of the market.
Market which is still trading at maybe in India, say 18, 19 P multiple, where the mean is probably closer to 15, which means this market can still fall 15, 20% and only have reverted to mean, not even have got terribly oversold, trading at 12 P multiple or something like that. Do you therefore see that kind of downside potential in absolute terms, that it can take in another 15% even from here on the way down?
It certainly is a risk because remember, what we're looking at is, China, which is going through, frankly, a recession, even if their GDP data will not reflect it, but every other measure would tell you that they're in a negative growth environment. Europe is teeter-tottering on the edge of a recession, if not already there. US, there is a risk there might be a recession. When was the last time that you had a global recession and the Indian market was trading above its mean? The answer is never. So the reality is that if that scenario plays out where the West does go into a recession, then there is no way that the market doesn't have another 10 to 15% downside. Now, am I certain that the US and Europe are definitely going to a recession? No. But is there a significant risk of that? Yes. Therefore, I think the markets are going to remain under pressure until we get clarity on where global economic growth is going.